Hey everyone, it's Mike Valtos, and welcome to this little presentation on the Valtos SNR levels for November 17th, 2017. Now, on Friday, right, the 17th, I did a presentation with Investor Inspiration on support and resistance, and I'm going to follow it up with this quick little video, just highlighting some of the day's activity in the markets with the support and resistance levels. And I showed a couple charts in real time in the presentation, but I just want to follow up with a couple other markets. There was some interesting things. I talked about crude in the presentation live, but I didn't talk about the E-minis. E-minis were interesting, and there's one other market which I wanted to jump into really quick. But before I get started, brief disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the tools I use in this presentation is the Valtos SNR levels, and it runs on NinjaTrader 7 and NinjaTrader 8. I'm working on a fix for the NinjaTrader 8 version. A few people have been reporting some issues with it, and I really hope to get that sorted out ASAP. So just be patient if you're on NT8, but it runs perfectly fine on NT7. But anyway, let's just jump into these markets really quick. Okay, so the first market I'll talk about is crude, and this is a 4-range chart. And if you trade on a 4-range chart, you're going to be in and out of the market very often, actually. And this is how it's looked since. We'll just take it from. This is the reopen, and this is 5 o'clock at on the 16th, and you can see it gave a couple little sells here. It didn't really work out that great, but again, that's what time is that? That's 2 a.m. Then you got this big move. You get your swing high here. We sell off. You got a buy here that failed. A buy here that failed. A small sell here, just went sideways. A nice little sell here. This buy failed. This buy just went sideways. A quick sell here for 5-10 ticks. Another sell here, another 15 ticks more or less. A little buy here that I don't know what you would have got out of that. Then you run into this area here where you get a buy, boom, you get support, runs right up into resistance, sells off to support level, back up to resistance, keeps going up here. You hit resistance, you sell off a little bit here, make a new high, just sort of go sideways. This buy fails. It starts going up, then it fails. Then you get this nice little buy here, rallies up to resistance, sells off, back down to support, rallies back up to resistance again, sells off. There's no buy signal on this at this point, but again, you're coming down into an area where you got support, right? You've got support here in the order flow. It would look beautiful if it showed up there. It just didn't, but you already know you got support there, so you could sort of anticipate it, right? That's what you want to be doing as a trader. You want to be anticipating. That's the thing that I talked about in that webinar is, most traders, the part that they miss out on is, okay, so you got this move here, right? You sell off from this high here. You get down here, you have support, you rally up to resistance, sell off. Now, there's a couple ways you could trade it. One, you don't know, that you're going to have resistance here. You may think you're just going to keep going higher, but you hit this area of resistance and it prints there, right? The indicator prints. So you could be throwing in offers here so that if you retest it, you could be getting short, right? Rather than waiting for it to retest it and then start selling off and you're getting short down here, 10 ticks lower. Just as, you got your buy here, you got your support in this level, you rally up. Okay, well, what are you going to do? You're going to work bids. You're going to stack bids down in here, from around this level, a little bit ahead of it, down through it, or down to the bottom of it. So if it does pull back, you could get long, right? You don't need to wait for a confirmation in the market to start to move up to say, well, we got a double bottom here. I should be buying. That's the move you want. This is the move you want, right? A lot of people, they wait for confirmation. Famous last words. What are you doing? I'm waiting for confirmation, and confirmation never comes sometimes. Now the E-minis were very interesting here this morning. Friday morning, and just taking it back here a bit. Since this is here 8:50 a.m., what do you got? You got a resistance level. I mean, okay, you poke through it by the tick, right? Doesn't necessarily mean that, hey, it's the end of the world. Hey, we poke through it by a tick. You know, it's not really resistance. Bullshit. It's resistance. You know, and what you do, you sold off down to a support level. What you do, you rally back up towards the resistance area. Now, you know, in this case, resistance just happened to be the opening price, which, you know, if you start trading around the opening price is a sign that the market's going sideways. You know, then what do? You sell off back down to support. Okay, and there's another case where you do overshoot it by, I don't know what that is, about a half a point, and then you rally back up to where? You rally back up to the resistance area. A little bit later in the day, again, it gives another signal there. Anyway, you already know that's your resistance at that point. And what do? You just drift back down, back down, back down. A little bit later, 2 o'clock, you get a lower resistance level, and then you sell off some more down into new lows for the day. So, you know, it was a range-based day, more or less, you know, basically between 78 and, you know, 82.5. But, you know, when you're trading, right, you have to have more than one style, right? You have to be prepared to trade in range-bound markets like you saw here in the S&Ps. You know, crude oil, even though we were going higher, you know, we run into parts where we're just, you know, trading in a range like this, boom, boom, boom. You know, you had some moves up, some trends up. You know, we were on an up move here, right? And you get another buy signal there. You know, these sells, yeah, they weren't so hot, but you know what? The buy is more than made up for it. And then when you're sitting here in this range-bound market, you know, you get buy, sell, buy, sell. You know, it's one right after the other. So you should have a way of catching reversals, catching range-bound markets, and catching you know, trends when they're occurring. Okay, now this one I want to show you. It's a little bit more, I won't say advanced, but you know, if you're using the delta scalper and the S&R levels, what do you want to be looking for, right? That's the question. Is what you want to look for first is the SR levels to give a sign, okay? Because you can put in support or you're putting in resistance, okay? So like here you have a sell on the S&R levels. You got some buys, okay? I'm not concerned with those because I'm just looking at it in relation to delta scalper. So I don't know if I could draw here. What do I want? Yeah, do this. Okay, so here, whoops. So you have this one. So you got the delta scalper right here, about 5 bars after you get the signal for the SR levels. Then you got a nice sell-off. Why? Because what you're looking for, right? You're looking for the resistance level to be put in, and then you're looking for the delta to confirm it with, you know, with strong aggressive sellers. You know, in this case, you have the resistance level put in. You do poke a little bit higher past the resistance level, okay, before the strong selling finally comes back in, and it's coming back in around, you know, in this bar, which is right around that resistance level. And then you sell off. You sell off from, you know, what is that? 118.30 down to 118.10. Kind of goes sideways. You got another one here. You got the resistance level with the delta scalper. Sell. And what happens is 1 bar, 2 bars, 3 bars, you're going sideways. Okay, it kind of sucks, but you know that's what happens sometimes. And then, you know, so then it pops back up here, stops you out. Here you got a, where is it? Right here. You got the buy, resist support level. Then you got the delta scalper kicking in right on the next bar. You do go up, and then you come back down, test that support level before finally making the move that you want. Okay. You know, so you got one. Yeah, it's debatable if this would have stopped you out. I mean, you're only talking, I mean, again, I don't know where you'd want to place your stop. If you know, bottom of this bar is 92.5, it would have traded down to 91.5. So got one full tick through here. You know, but, you know, what can you do? You know, this one definitely would have stopped you out. This one, no, you would have got in fine. Really what you want the move to happen as soon as the delta scalper kicks in. You don't want to start seeing it go sideways on you. You know, this one started to go up, then it sort of reversed back down. Okay, then just really quick, I just want to show you the Nasdaq. This is the Nasdaq. This is an 8 range chart. You got a support level here Boom, what happens? We get a nice little rally here, come back in, take out the support, put in a new low, rally up, put in a new low. What do? You got a support level down here. You rally up to a resistance level, sell off towards the support area, rally back up through the resistance level, and what do you get? You get another sell signal right here, right at the same level. You know, I love these where you get the resistance coming in again, or support coming in, you know, at a previous level, right? So you had it here, all of a sudden it's coming back in because, you know, what's happening? Okay, you got sellers coming in here, we sell off, rally back up to this area, and it's at that area where we say, hey, you know what? This is a good area to sell because they were selling earlier, you know, all in here. And then what happens? You sell off again, come down to another support level. What happens is you rally back up, you know, from this low here, 63.20, you know, the low is 4 3/4, but, you know, essentially from the next bar is like 26, 27. And back up to where? 36, 37. And even in here, you've got a support level, you know, which you draw it over, you get another support level here. It's not the biggest move up, but again, it's still a decent move, about 3 or 4 points. Another support area down in here, rally back up, resistance level coming in here, sell off down into the support area. Then this one just breaks apart right here, and you sell off into new lows, and then you end up closing the day. So, you know, it was an interesting day. That was actually 4 markets. But you know, I wanted you to see that so, you know, you could understand, you know, why you have to be able to trade in different types of market conditions, right? You know, because the markets don't always range trade. They don't always trend. They don't always reverse, you know. I mean, the reversals are where you're going to make the big money. I mean, I'll say big money. The reversals are where you're going to get the big moves. Trends, yeah, you don't always catch the trend, but I mean, you know, reversals where you're going to catch the trend beginning. You can get in a trend, you know, the way I trade trends is, you know, I just get in, get out, you know, get in, ride it for what you can, and then get out. And of course, range bound days, right? You know, range bound periods, just like the S&Ps. You know, it was range bound, but you could have got, you know, trading in that range. You know, even though it wasn't a big day as far as activity up and down, but, you know, you could have got 8, 9 points out of that day. Points, not ticks. So, you know, on the presentation, I had a special price offer. This is the link for it. You know, it expires Sunday night. I may have to extend it until Monday because I didn't get the webinar replay, and you know, because the presentations were on Friday and they ended kind of late. I think like 4:30 or 5 o'clock in the afternoon, and you know, people that put the presentation, they just haven't had time to get me the link before the weekend, which is, you know, understandable. Usually when you do it on Friday, I don't get it till Monday. So I may extend it a day, but, you know, if you want to get in, you get the indicator. And I'm going to also give a special members only presentation, covering some of the other uses for the indicator with other trading tools, you know, some of my other indicators as well. So it'll be on Wednesday before Thanksgiving on the 22nd at 7 p.m. Central Time. So it's definitely, you know, a decent tool that you could add for your trading, even if you have an existing way of trading. It's something that you know, is worthwhile, definitely. So thanks, and hope to see you guys on Wednesday. Bye bye.